In this video we are going to take a look at a difficult market manipulation example that involves quite a bit of ambiguity in the Euro-Dollar 5-minute chart. This whole example revolves around some sort of mirrored manipulation where it's difficult to know to which side of the market the large traders intend to go. In a situation like this, we can employ the idea of the Parando's paradox in game theory. In practical terms, this means playing for both sides of the market in strategic places and with good risk-reward ratios in both trades. If we do that, we will probably be correct in one of the positions, and the profit of one will clearly surpass the loss of the other since the risk-reward ratio in both will be around 1 to 4. The candlestick that was the key to this whole trade idea was also subjected to some kind of news events, but I'm not sure if that's the case because I don't really care that much about news events. The fact is that we can see a massive shift in volatility in the candle marked as the double-edged candle. I called it a double-edged candle because that candle pierces through order clusters in both sides of the market, triggering different types of retail traders. Moments like these usually represent a rupture in the price chart, meaning that the market will be a completely different thing after such an event. Another way of looking at this is that double-edged candle marks a shift in the nonlinear dynamics of price. That's a good thing because it clears the memory of price to some degree. In this chart you can observe two wash lines that pinpoint the precise levels in which retail traders probably got wiped out of their positions. After the double-edged candle, you can see two green arrows showing the candles in which the long and short positions were open. I purposefully made both stop losses roughly the same value at the same time I respected the correct place to put them, which is in the double-edged candle's extremes. Both trades were triggered at the wash lines. This is a more advanced way of entering trades in which the trader does not necessarily wait for the candles to close, which can be a dangerous little game on itself, but it has the upside of being a more precise triggering method. Both targets are 4 times as large as the stop-loss orders. That means that one trade will probably be successful generating about 40 pips of profit, and the other will lose generating 10 pips of loss. This will obviously create a net result of 30 pips of profit. We just don't know which side will win. This technique borrowed from game theory is like a counter-attack on the ambiguity of some market situations. There are some situations in the fractal flow method where you will also find yourself in a crossroad like this one. Thankfully you can use this double trade technique to solve this problem. This is a good thing, but don't forget that it can also backfire. For example, price can move in such a way that it hits both stops before hitting one of the targets. That's possible, but it's not very likely assuming you have good trade location in both operations. Let's see how the market develops, and then I will attempt to show you how the double-edged candle ruptures the chart and changes the nonlinear dynamics of price. As you can see here, the short trade was the successful one in this case. I want you to pay close attention to this chart and notice how the market after the double-edged candle seems to be a different market than before. These moments can be considered as inflection points that change the nonlinear dynamics of price and reset the market memory to a certain degree. That means we can forget most of what happened before that candle and we can start looking at this market with a fresh look. Before I end this video, I want to share with you another email that I got from a satisfied student. He sent me a chart showing some of his successful trades, and he wrote the following. Hello again. I had just wanted to take some time out to thank you for your distribution of correct knowledge of the Forex market. I have spotted 2 trades since the 4th of December 2018, and both have been successful. Each had resulted in 300 pips profit. I have attached the photo within this email. Thanks again. Making 300 pips of profit in one trade is no joke, so I wanted to show you all how it is certainly possible to achieve such results by being a Fractal Flow student. If you are interested in learning my trading techniques in depth, you can check the strategy store in the link available in the video description. If you enjoy the videos I do, don't forget to click the like button, subscribe to the channel, and leave your feedback below. Thank you for watching.